Hi, and welcome back to Stock Talk. This is Joe Rabil from Rabil Stock Research. Today in the lesson at the beginning of the show, I want to spend a few minutes just talking a little bit about screens and the positives and the limitations to them. Let's go ahead and get into the agenda. I really want to talk about how I use screens, and I think there's some things about screens that I think you need to understand. My interpretation from talking to people is that I get the impression that people believe they can run a screen and anything that passes that screen would be viable. So I want to make sure you understand that there is a limitation from that standpoint. I'm going to go through examples as to why I would say that. So you need to be able to go through and look and define the pattern you're looking for, and then hopefully the screen will meet that criteria good enough that you can find a few ideas from it. But don't expect a screen to go and be the buyable pattern. You're going to end up taking a list of stocks, reducing it down to save you time, and then using that screen to create a watch list. So let's go ahead and get into that. And when we're done with that, we are going to go through all the stock requests that came through. We had a decent amount this week. Okay, so I got my 4 charts up, but on the right, I've got a scan result of something I created in StockCharts filtering capability, which is very nice. Opposing trend setup weekly daily. So what does that mean? Essentially looking for stocks that are in uptrends on the weekly chart where the daily is going in the opposite direction. And there's a couple of qualifiers that I use. I want to make sure that on the higher time frame weekly that both lines are rising. I also want to make sure the price is above the 40. It doesn't have to be above the 18, but it needs to be above the 40. So if we're above the 40 and both lines are rising, then I consider this to be a potentially tradable setup. And then on the lower time frame, I want to make sure the 18 is below the 40 and price is below the 40 on this time frame. So I'm above the 40 on this time frame and below it on this time frame. And the reason why I do that is because I know I'm trying to get in on this weekly time frame. As long as I'm not above the 40 yet, I haven't truly triggered to the upside. And so what I'm trying to do is I'm trying to take a stock that is in an uptrend on the higher time frame, and the lower time frame has gone down and basically has worked off the overbought condition on the higher time frame. And now we're looking for when this time frame gets back in line with the weekly. So that's what I'm trying to find. So that's what the goal of this screen is. And instead of going through thousands and thousands of charts, I'm going to screen it to try and get it down to a workable number. So I'm down to 18. The problem I've got, and the reason why this is so difficult is, you think you only have 18 stocks after screening a couple thousand, and you think that all of these are viable. They're not. And I'm going to show you why. Let's just look at the first one. So BP had a pretty decent up move, but look at how there was no ADX to the upside. I mean, I'm just going to pass on this. It's not an A stock. I want an A plus type of a pattern. I really don't want to play in the B minus, C plus category, which I would consider this. Notice how there's pretty good resistance that's formed here. So, I mean, I don't really want to shoot a 3-pointer with a hand in my face. I'm looking for something closer to the basket. If I can find a layup, that's what I'd prefer. But, the goal here is to try and identify the highest quality patterns you can find that meet all the criteria you're looking for. This is just too sharp of a pullback. If we look at British American Tobacco, now this is a little bit more attractive. You notice how we broke out on the monthly here? We still have room before we get into the bigger resistance. Notice the ADX pattern on this time frame. Look at how strong that move was. And then we pulled back. Now the pullback was a little sharp. You see how that was a little too sharp, how that pulled back? So that means to me that I want to let this consolidate a little bit more, and maybe what we want to find on the trigger side of the equation is something a little bit more in these terms. Maybe we make another higher low and another higher high. Remember, all we've done is gone down and moved up. We really haven't done anything on this time frame yet. So I'd prefer to see this come back and check out the 18-day again. The 18-week again, and then if it can lift off that, I'd be interested. But this is a stock that kind of looks intriguing to me. I'm not going to go through all of these, but look at the violence of this pullback. Yeah, this 18 is above the 40. I mean, it does meet the criteria if you think about it. The problem is look at how violent that move was. So this is a no-go for me. Fox is a little bit interesting, but it's not really a pullback trade because there was no breakout. You see how there's no ADX on the breakout? And in fact, MACD didn't make a higher high or anything like that. This would be a low ADX pattern. And if we break out above 40, it might be intriguing, but nothing until that happens. So it's not really meeting the criteria I'm looking for because I'm trying to find a strong trend and a pullback, a strong trend on this time frame and a pullback on this time frame, and then look for an entry. And you really don't have it here. Just skipping a few. So look at how sharp this pullback was. I mean, I don't really want to mess around with that, but worse than that is see how this has been moving up and there's no strength to the ADX. The ADX is still below 25. I'm just a pass. It's just not gonna show up for me as something that looks that intriguing. Look at LYV. So this is real choppy. It's not really setting up a pullback play. I mean, potentially it could set up a play if you break out through 125, but it's not meeting the criteria I'm looking for. I'm looking for a strong trend and a pullback that I can play as it turns back to the upside. This just doesn't meet that criteria. Let's go ahead and look at a few more examples. So look at something like SBSW. Pretty nice move to the upside, pretty good ADX in place. Yeah, I don't like this making a double top on the monthly chart, but I would give this a second look. This would go into my watch list, similar to maybe Fox with the trend line alert and the American tobacco we talked about at the beginning, British American tobacco. But if this breaks this trend, this broke this trend line, moved to the upside, had pretty good ADX. Now it's pulling back. Now we're looking for an entry on this time frame. See if we can get a zero line reversal or something like that. Look at TSN. So TSN had a really nice up move to the upside, good ADX in place here. But the pullback really overran the 18 weeks. So now I have to be a lot more particular about my trigger. I don't just take a trend line break. I don't just take a 40 break. I'm looking for a little bit complex, more of a complex pattern, making a higher low, testing the 18 on this time frame, looking for some DI improvement, looking for some MACD improvement. But if you look at the higher time frames, look at the way this is holding the breakout area. This has really good momentum characteristics. So this is one that would go in my watch list. So I didn't go through all of these, but I can tell you I did before I did this video, and only 2 or 3 looked attractive out of the 18. So I took a screen that had thousands of charts to start, took it down to 18. You would think that if you take it down to 18 that all these are buyable. But that's why trading can be difficult and using screens can be difficult. It's not going to do all the work for you. I mean, when I do a screen, I tend to have like 100 or 200 stocks passing still because I want to eyeball them all. I want to go and look at them. Screens can only do so much for you. There are some limitations there. So you have to make sure you know what you're looking for. And yeah, I could throw in more criteria, but then it leaves you with the potential of missing them. I think you need to get really good at identifying the types of criteria that you're looking for, screen it down, and then go from there. And if a stock has good qualities, you put it in a watch list. If it doesn't have good qualities, you move on. Okay, let's go ahead and look at some individual stocks. Just briefly, my services can be found at rabilstockresearch.com. If you're interested in trying the service, you can use the coupon code StockTalk and get the first 2 months for $50. I send out about 2 to 3 reports each week, and I do have a special video for the individual package subscribers that goes out each week. Let's go ahead and get into the individual stocks now. So during these reviews, I'm going to, when I have time, I'm going to start out with an index that I think is just kind of important, but also kind of explains some of the tools that I use. So I'm using the TNX, the 10-year Treasury yield today. And one of the things that I think pretty important to recognize is we see on the monthly chart, we get this pullback here, and that's a pinch play on the monthly way back in 2021. And while that's taking place on the pinch, that's back here, we get a zero line reversal. Now, yeah, it did kind of make a double bottom there, but the idea, and sometimes on the longer term trends, it does take a little while to get going, but we have this pinch play on the higher time frame, and at the same time, we get a zero line reversal to develop. Then notice what happens on the weekly. We get this pullback here with a pinch that develops in the MACD. And while that's taking place, we get a zero line reversal on the daily chart. Okay, so we were going through this sequence where we're turning on the monthly, we're getting confirmation on the weekly at the same time. This is true multiple time frame confluence amongst indicators, okay? And then we get the same thing here, and it's working in multiple time frames. Now look at what's happening on this last leg. We get another one of these pinch plays, but this time on the daily chart. And yeah, I'm not going to bring up the hourly, but if you did, you'd have a zero line reversal that developed there as well. So I wanted to make sure I continue to talk about the fractal nature of the markets and how we can see all these take place. Now, why this is important is because we started with the monthly, we got the weekly signal, and now we've got the daily signal. We'll probably end up getting a little hourly signal, and maybe that's already taken place here, and we're pushing to the upside. I think this is probably starting to run its course in the near term. I wouldn't be surprised if we started to go through some type of a consolidation or correction or something like that before too long. However, based on the condition of this market and what's taken place, based on the momentum conditions that are in place, I'm of the opinion that this market has a very low probability of making a peak this year. I think there's a very good chance that we make a higher high next year, believe it or not. I know it's only April and I'm kind of making this call, but just based on some of the things that I've learned over the years, I can say that while we should go through some kind of a consolidation or correction before too long, my guess is that we're going to make higher highs after that. And again, I could see us making a higher peak into next year. And obviously, the next resistance level, a bigger resistance level, is slightly above 3. So anyway, that I think taking into account a couple of key things here with respect to looking for confluence amongst indicators, the MACD, the pinch play and the zero line reversal work very well together. And then also just the momentum conditions and the nature of this yearly trend and what's taken place suggests to me that there's more upside coming. Okay, let's get into the requests that came through. So first one is CrowdStrike. We had overrun on the monthly chart. You see how this came down and broke the 18. Now, it didn't break it in a way that caused the line to roll over. So it's not necessarily a reversal of trend, but I think it's weakened the trend. We've lost momentum because we overran the line. And that happened in any time frame that happens. That's important. We can see where we overran it back here on the weekly chart, and you see how it just hurt the momentum. It didn't necessarily roll it over, but it hurt the momentum where we didn't get a whole new move right away. I think the same thing is happening here, and I wouldn't be surprised if we spent some time consolidating sideways. I think it's going to bump its head up on this 225 area, and he's not probably ready to get through this quite yet. So expect some sideways consolidation, but I do think there's pretty good support down around 175, although we could be headed back to test that area. Okay, Datadog. So this one is a little different. Notice how we've corrected back to the 18-month. But we didn't break it. There's no overrun, and we're holding the prior support level. So these are kind of important things to look at. I always like to take the moving averages off the chart and see what I can see based on the price action. I do like the fact that this is stair-stepping higher. You notice how we went to 200 and then pulled back and right to the prior breakout area. That's usually a good sign. So we're still in good shape here as long as we can stay above 125. Now, I would tell you that we've got a zero line reversal potential developing, and we've got low ADX here. So you can draw a trend line in place, and if we break the trend line without any further weakness here, I would consider that to be a playable trade to the upside. GFI. So we've got gold made a pretty nice move, and now we're going through a correction. And gold itself is making a deeper pullback than something like Goldfields here. Look at the momentum condition that's in place on the monthly chart. Look at how strong the ADX is on the weekly chart. And now we're going through a correction. We just got too far away from the 18-week. I think what's going to happen here is we're going to set up an opposing trend trigger where the 18 is going to come down below the 40. The MACD is going to come down here. We're setting up somewhat of a pinch potential, but even if we don't pinch, where maybe it actually overruns a little bit, I would be watching this time frame, this daily time frame, for a zero line reversal and some form of a 1, 2, 3 change in trend, right? I mean, opposing trend type of a trigger back to the upside. It's probably about a month away, 6 weeks away, something like that. It could end up coming a little bit sooner than that, but it's just something to watch, I think, over the course of the next month. Illumina. So go back and look at what the monthly did. And notice how we overran both of the moving averages. Didn't just overrun the 18-month, we overran the 40-month as well. Now, we have reverse divergence developing here. You see how MACD is making a lower low and price is making a higher low? And we've got pretty solid support because look at this big round number at 300, and we've got a pretty good congestion area here. So it doesn't surprise me to see this rallying. What concerns me a little bit is the overrun and the fact that 400, maybe the low 400 area is going to provide some resistance. So I would actually, if I'm going to play this, I would probably be playing it off the daily, hourly combo, looking for a trade back up to 400 or something like that. But if I'm looking for a bigger picture reversal, I just think it's going to take more time. Too much damage done to the monthly chart. And now I would think that the 18-month is going to provide some headwind as it rallies up. But I do think, based on the reverse divergence, we are going to get a rally. Okay, so this Biotech ETF. Again, notice what's happening on the monthly chart. We came down. We overran the 18-month in a violent way. Okay, I mean, it was trying to hold it and then it just broke to the downside really violently. 18-month is now declining. We're below the 40-month. But more important even than any of that to me is look at how we didn't hold the big round number. So we always want to look at where the last major support level was. If we would have done all this damage, but we would have held the 100 area, then I would say this could recuperate a little bit more quickly. But look at the volume action to the downside. I mean, there's a lot of damage done to this chart, and I haven't even looked at the weekly or the daily. I can just see that from looking at the bigger picture. Now, if we want to, and I don't see this as a potential trading play to the upside because we're still below a declining 18-week, and we have negative momentum conditions based on the ADX. So we probably have, it's probably run its course on the rally, although it's very possible it'll try and get back up to 100. I would just tell you, I would just pass on this for now until we get a much more stable base formed. I think it's going to take a while to really put this in that type of position. Okay, so I got a Canadian stock that was requested, and look at the way this has played out. We had a pretty strong move. Now, we're not back to the 18-month. I mean, I can see that we've still got a little bit of air, but we found support at the big round number at 2,000. So always recognize that. If you don't get back to the 18-month, see if there's a reason on a price basis why we didn't. And the reason is that we hit the big round number at 2,000, okay? Now, it is forming somewhat of a pinch play here, and we do have a zero line reversal. What bothers me about this play and just saying, okay, I've got a pinch on this time frame and a zero line reversal on this time frame with low ADX. Do I really want to just buy this? I don't really have a good quality trend line to draw because what I need here is this rally, this move up to lead to a lower low. And we didn't really have that to be able to draw a trend line in. So yeah, I could draw a trend line horizontally, more, sideways like this if I want to do that. But I would be more inclined to wait for the daily to give me a little bit more of a better, something better than what I'm seeing. And a lot of it has to do with the fact that look at the violence of the decline. You see how this dropped off this peak in a really violent way? I just don't want to jump the gun on this. Let's wait for a little bit more confirmation, although it is a stock to be watching. VALE had this big drop on the monthly and then the big rally on the monthly. And what I've said in the past, when I see this kind of action, big move up, big move down, I think you got to come back down again and form a little bit more on this time frame. I don't think it's ready to take out the highs. I think it's rallied way too much off the low to expect a new low to come in. So the highest probability is an inside swing. So here's the peak, there's the bottom. Now we make a new peak and we make a higher bottom, so we get an inside swing that's inside that high and above this low, right? Some kind of an inside swing, and then I think it sets the stage for higher prices. Okay, so TEL, let's go to the monthly here. Now, we're breaking a downtrend line. We're holding the 18-month. We had a pinch that led to higher prices. Okay, now the green DI came above and confirmed that pinch play. You see how green DI came above and held 25? Look at the volume pattern. Now we've got some red above the average volume, but look at the size of the green bars. That's telling me that this is kind of under accumulation when I look at that on a monthly chart. Now what we've done is we've broken the downtrend line on the weekly chart. You see how we did that? We broke the downtrend line. Now I would be looking for some kind of a pinch play. We've got improving ADX here. Look for some kind of a pinch play, hopefully down a little bit closer to $5. And then that should set up a zero line reversal on the daily, potentially. Now, it doesn't always play out like that. We don't always get that multiple time frame confluence pattern, but it's something to be on the lookout for. And what that tells me is that this is just not ready right now. It's going to take a month or two at least to get this set up, I think. NFE. Really strong move to the upside. Look at this move off the bottom. You see that strength? You see this move? You see the MACD improving? I mean, I think those are all really bullish signs that I want to be watching this. You want to put this on your watch list and really keep an eye on it. Now, the interesting thing is when this initially broke the trend line and started to come back and test the moving averages, look at how this developed on the daily chart. You see the ADX kicking in, and then we got the pullback to the 18 and the 40 that were rising here. This was the real this was the first entry at 30. Now we're waiting for, I think, something a little bit more complex to get this a little closer to the 18-week. It's going to take some time, but this is another one. Both TELL and NFE are both stocks that I would tell you that we want to keep on a watch list, but you have to be patient. It could take up to 2 to 3 months to set these up again properly on the weekly chart. But if they do, I think it could be really intriguing just based on how they're playing out and the momentum conditions that are in place. Okay, so let's look at Nvidia. And what I had been saying about this, I brought this up not too long ago, probably about a month ago, that we were still in an uptrend on the monthly chart, right? I mean, we came down and we found support at a rising 18-month. The momentum conditions are pretty good on the monthly. What was bothering me about this is look at what this did off the peak. You see how hard of a sell-off this was? That was very, very violent to the downside. Now, I know it formed a little wick here where it rallied off the low, but you got to realize that's pretty harsh selling all the way down from the highs. I mean, you see those big red bars there. Now, if we look at what's going on the weekly, when this was trying to rally back up, we had a declining 18-week. So if we look at this, I mean, I'm not a huge fan of buying a moving average that's declining. Like we have a break above a moving average here and it's still declining. When I see that, I'm looking for some form of a retest to take place. I don't typically see a break of a declining moving average that just keeps going. Okay, this is really important. So if we have a declining line, what I'm expecting is either failure there, come back down, and then rally back up, and this softens this line as it flattens out. Or we move above like this, and then we come back and test, and then come back, and again, this line is flattening out and cupping around. So, I know we had a zero line reversal here. I know we had low ADX, but I think that was too vertical of a decline to want to play a zero line reversal. It's telling you the velocity of the decline tells you a lot. When you have a lot of velocity to the downside, you got to be very careful about trying to buy the initial surge off the low. So wait for it to test, see if this can hold. If it can turn back up and get back through the moving averages again, we'll have a double bottom in MACD. And hopefully we'll have a little green DI showing up on the weekly. That's the one that gets me a little bit more interested. Now I know the O'Neill pattern would be coming back up through this, he calls it like a double top pattern where we make a move here and come back down. That's a little bit more conservative. I don't have a problem waiting for that. But I'd be watching this test, and as it lifts back off and gets back up through these moving averages, it'd probably be, especially if the MACD is holding a zero line, I would say is probably the higher quality setup there. So running out of time, let me just give a quick glimpse. Nothing changing in Boeing. You see how this is making lower highs and lower lows? Nothing to do here until we make a shift and get back above these moving averages. Thanks for joining me. If you're interested in getting any stock ideas or stocks that you're considering or holdings that you have analyzed on the show, send it to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.